Good afternoon, everyone. Please confirm that you can hear me clearly.
Good afternoon, sir. We can
Good
hear you.
afternoon.
So, sir,
Can hear
can
you,
hear you,
sir.
sir.
Good afternoon.
Okay,
Good
okay.
afternoon, sir.
All right, everyone. It's good to have you guys here again. And I hope you are enjoying your weekend. And today, we are going to be continue our learning on reporting. We're going to continue our learning on reporting. And we are going to be looking at a very, very
No,
important
madam.
topic. We'll be looking at a very important topic today, which is statement of cash flows. It's one of the most important topic across all levels. And so the way I'm going to do it is I'm going to finish statement of cash flows today, single statement of cash flows. Your syllabus now also requires that you also know consolidated statement of cash flows. Yes, for SBR, that one is a given. It's part of their syllabus. But for financial reporting, we always assume that we don't have to teach you guys. So at least we have been proven wrong. They have asked it in your exams, in some instance at one diet like this. So we're definitely going to do that. But I will only teach you that when I'm done with group account. So today I will just finish up how to prepare statement of cash flows. May I remind you that on the journey we are trying to go through, what we have been trying to do since inception is trying to finish up some very simple area of your syllabus, but has high coverage. And that's what we have been trying to do since the beginning. And in doing that, we have been able to cover like 4 topics on these Sunday classes. We have been able to cover regulatory framework. We have also been able to cover conceptual framework. We have also been able to cover ethics in business reporting. We have also been able to cover technology in business reporting. And I think we have even done ratios. Wow, that's so good. We have also done ratios. And I've sent you a lot of past questions. Maybe when I'm done, if you were able to finish up this statement of cash flows early, I would also go through those past questions with you, just so that you will not go and dump it anywhere. You see, the reality is this. Conceptual and regulatory framework, if I want to be conservative, that's 10% of your syllabus across board. Ethics and technology in reporting, if I want to be conservative, that's also 10%. It's more than 10%. They can ask, it's usually 15 to 20%, those two, but let's even say 10%. Let's respect those other standards that we have not touched. That's, let's say 20% we have covered. Without exaggerating, ratios or interpretation of financial statements is 20% of your syllabus. So by implication, we have done 40%. So by now, you can conveniently go through past questions and solve questions on ratios, solve questions on those areas that we have covered so far. Another important area that comes out often, so they didn't ask it last diet across board. So most likely you're going to find it this diet in your exam, talking about statement of cash flows is a germane area of your syllabus. So when I'm done with this, then I can then go and deal with the ones I've mentioned, which is sustainability reporting and integrated reporting. And also, I also want to deal with presentation of financial statements as replaced by IFRS 18. We're going to look at all of those before I then enter into group accounts, then enter into the standards. So the last thing I want to do is those standards. I will have covered all those areas just so that you will focus on those one at the very beginning of the diet. Okay, now let's get into business. I saw your hand, but I needed to make my point. Can you ask your questions now? Your question now?
No. Good day. Thank you for the opportunity. I just wanted to remind you that the last class you said we were going to dwell on sustainability. You have explained it that after cash flow you treat it. So I'm lowered now. Thank you.
All right. Thanks for the reminder. Okay, so let's move to statement of cash flows. Now, the first thing I need to mention is this, that a statement of cash flows is a statement that is prepared on a cash basis. So it's like an exemption to the other statements that we have that are prepared on accrual basis. We prepare statement of cash flows on a cash basis. And the implication is that the implication is that the items in the statement of cash flows will basically be cash inflows and outflows. So that's what you're going to find in the statement of cash flows. Majorly cash inflows and cash outflows. That's where you find that. It is important. It is important to note that. It is important to know that a statement of cash flows is also known as statement of changes in position. Statements of changes in position. See, this statement I've just made now is very important. If you really want to understand and be comfortable with how to prepare statement of cash flows, you need to understand and remember this, that a statement of cash flows is a statement of changes in position, or you can write it fully, statement of changes in financial position. So yes, it is a statement of changes in financial position. So this means that to prepare a statement of cash flows, you will need to identify movements in financial position items like assets, liability, and equity. If you're able to do this, then you would have prepared a statement of cash flows. If you're able to identify movements in these items, then that's your statement of cash flows. So what I mean therefore is this. If you are preparing statement of cash flows, the focus is really going to be the statement of financial position. And that is why that in order to prepare a statement of cash flows, you will require two statement of financial position, which is the current and previous year, and one statement of profit or loss. The reason why you would always require two statements of financial position is because is to identify cash flow is movement in position. It is movement in position because anything that happens in a business in terms of cash flow, everything is flowing from you because your cash itself is an asset. So your asset, for example, if it goes up, it's either you are making income or you have acquired additional assets. If your liability should go up, is either you are incurring expenses or you have additional liability. If your equity should go up, you're getting additional capital. If it should go down, most likely maybe you're paying dividend. So these three movements covers everything that's happening in the business. And that's the direction, that's the focus. That's exactly how I'm going to teach you how to prepare a statement of cash flows. So a statement of cash flows is segmented into three activities. They are,
Hello, tutor. Good evening, sir.
yeah, good evening.
Hello, lecturer. Yeah, please, apologies. I will be asking questions a lot, so that I can catch up with the class. I'm beginning today, and it's been I left these stuffs very, very long time. What do you mean by statement of changes in financial position?
Okay.
Please,
So
I need clarity.
so what's your name, please?
My name is Ewerenyo, sir.
All right. So this is your first class, I guess.
Yeah, this is my first class.
All right. You're welcome. You're welcome.
Thank you.
Yeah, I actually like that. So you guys feel free. So, but the way we operate here is that when you want to ask a question, you indicate by raising up your hand. You need
Sorry
to
about that.
yeah. So I will actually see it, then I will attend to it. So it won't be nice. You would
I understand. Sorry about that. And one of the reasons is that I'm not so conversant with Zoom, as in where to raise your hand. If it were to be Teams, it would have been easier for me. That has been just the issue. That is why I know it's not so civil to just start talking. Do you get? I understand that part very well.
All right, thank you very much. So let's remain muted, but you are free to ask questions anytime you want. Okay, so I really have to answer your question. I've actually explained what statement of changes in position means. I've explained it, and what it means is that is it means movement in assets, liabilities, and equity. So when I said
So
statement
I could
of
refer it to the traditional balance sheet.
exactly.
So they don't call it balance sheet again. They call it statement of changes in financial position.
No, so they call it
No, sorry,
statement
statement of
of
financial position.
correct.
Okay.
Correct.
Okay.
Exactly.
Then
So the
statement of
changes
profit
in
and
those
loss is profit and
positions.
loss account.
Yes.
Okay. I just
Yeah.
wanted to be clear. And then I
Okay.
understand that statement of changes in financial position is actually the cash flow statement, the statement of cash flow that that you're teaching.
Exactly.
Okay. Thank you.
All right, you're welcome. Okay. So yeah, that was a good question actually. So changes in position is just movements in the items in that statement of financial position, which are asset, liabilities, and equity. So don't worry, I'll move systematically to ensure that you are not lost. And that's how I will teach everybody. Okay, as I was saying, I've not said much, so I'm just teaching sequentially. So now I have in the last paragraph, okay, moving from that statement of changes in position, okay, I'm just trying to explain that changes. That before you can even capture changes in assets, that means you require two statements of financial position. They would always give you two statements of financial position for the current and for the previous year. And also one statement of profit or loss. It's just that would help you to identify changes. And that's why they always give us statement of profit or loss as well. So the major essence of giving you two statements of financial position, which is for the current and for the previous year, is just to identify to do that changes, because that's where the cash flow is hiding. That's where the cash flow is hiding for the current year. So that's corroborating the fact that statement of cash flows is also statement of changes in financial position. Now I then moved on. Now I want to go into the structure of a statement of cash flows. I say that a statement of cash flows is segmented into three activities. So when you see a statement of cash flows, they segment it into three activities. And I said, one, you have operating activities. Two, you have investing activities. And three, we have financing activities. So these are the three items, major headings that you're going to find in a statement of cash flows. So the items that appear under the operating activities are gotten from the statements of profit or loss. This means that what you find in the operating activities are the cash elements of the items in the statement of profit or loss. I'm not going to give you a template. I really do not want you to cram it. I'm going to explain it to you that in such a way that you yourself will then understand it. I don't like giving, there's like a template for this, but I'm not going to provide it. So when I solve questions, you will see how it is done methodically. It's better you understand it that way, and it's so easy. Again, the statement of cash flows has three major items, which we call activities. There is the operating activities, investing activities, and financing activities. The items under the operating activities, you would get them from the statement of profit or loss. That is where you get them from, which therefore means that what you will find in the operating activities are cash elements of the item in P&L. Just imagine what you find in P&L, they are income and expenses. So what we are saying therefore is that all your income, we need the cash element of it. When I say cash element of it, I mean the cash that you actually received. That's what we need. And that's what you're going to put in your statement of cash flows under operating activities. The same thing applies to your expenses. Okay, what you need is the cash that you actually paid. That's what you're going to find in your operating activities. And that's basically what you'd see in your operating activities. Secondly, the items that appear under the investing activities are gotten from the assets section of the statement of financial position. So what you are going to find in the investing activities, you get them from the asset section of the statement of financial position, while the items that appear under the financing activities are gotten from the equity section, equity and liabilities section of the statement of financial position. So that's where you're going to find them. So how you are going to identify those items is basically my job to explain it to you today. So there are two ways or two methods. There are two methods of preparing the statement of cash flow. And there we have the direct method. We also have the indirect method. Direct method and the indirect method. The difference between these methods, the difference between them appears under the operating activities. That's where you see the difference. Because they are the same for investing and financing activities. They are the same. There's no difference between the two methods. For investing and finance is the same way. Where the difference between these two methods would show is under operating activities. Is under operating activities. So for the direct method, we adjust each item in the statement of profit or loss for its cash elements. While for the indirect method, we only need to adjust the profit, usually the profit before tax or profits before interest and tax for non-cash items. So this is how we do this. And this is the introduction to statements of cash flows. And this is how we usually prepare it. Now, to then go ahead, I would then use past questions. We are going to solve questions to show you these two methods, to show you how to identify the items that go under each of the elements. And that's where we are going now. Before I proceed, do we have any question, please?
Yes, sir.
Okay, please.
Yeah,
Go
sorry,
ahead.
I've been hovering over this whole thing to get the stuff, where as in to raise your hand and other things. So I don't have a very good feel of Zoom. I hardly use it. It just because of this lecture, I started using it. I use Teams, so but I will just figure myself out very soon. Apologies for that. Thank you for asking. You know, I've been wondering. You said when you started, if you could raise the note you've been jotting down, if you could raise it up again a little bit. You said raise it up a little bit again. You said okay, a statement of cash flow is a statement that is prepared on cash basics, right? And you further went on to say okay, I understand this part of it. So but you what is this I want to ask again? I wanted to ask if, or aside on this cash basis, is there any other way you might be required to actually prepare a statement of cash flow that like you can be asked?
Okay, so let me not answer your question that way, because that is not a right question. Because we have already identified the items that goes into the statement of cash flows and the methods in which you can identify those items. So I think the right way for you to then look at it is your ability to then be ready to understand how to do this. Okay, so because that already covers everything we want to do. So that question they're asking, therefore, is not really relevant. Nobody will ask you that.
Okay.
Yeah.
Not a problem. Thank you.
All right. Okay. So let's get into business. Now, because they didn't ask it last diet. So, and which is May 2026. So let's solve this first one. This is the compulsory question of May 2025 at skills level. So just make sure you understand the way Were is doing now. That's how I want every one of you to do. It's better you just understand this thing here, so that when you are revising what you understand. Not that you want to, that's when you want to go and really understand. Just make sure you understand all of these things. Look at it, this diet, it was 30 marks because it was a compulsory question. Okay. And it comes SBR. For SBR, it's going to be consolidated cash flow. But there's no way, because it's the same way. The same thing I teach you here is absolutely the same thing I'm going to teach you in consolidated cash flow. The only thing is that there will be new terminologies like goodwill, NCI, investment in associates, and all of that will be coming up for consolidated cash flow. So, but I just don't want to start mentioning that since I haven't taught you group account. So I'll just hold on. But you will see that the methodology is substantially the same. Okay. Now, do we have a lady here in this class today? If we do, please, you can read this question for us. Okay, we don't. Is Promise here?
Yes, sir.
Promise.
Good evening, sir.
Yeah, good evening. Promise, please read for us.
All right, sir. The financial statements of Chukwuka Nigeria Limited are drafted below. Statement of profit or loss for the year ended April 30th, 2025. Statement of financial position as at April 30th. All right. Additional information. Number one, a financial asset included in the trade investment with a carrying amount of 1.5 million was sold for 1.885 million during the year, while a replacement was also acquired. Two, there was an issue of 3,750 million ordinary shares during the year at a premium of 32 kobo per share. 3. The short-term investment is highly marketable with 1 to 3 months maturity profile. 4. During the financial year, the company paid dividend of 5.4 million to equity holders, and this had been accounted for during the year. Delivery vans with original cost of 6.6 million and a carrying amount of 3,750 billion was sold for 2,520,000 during the year. The company is planning to take a long-term syndicated loan of 2 million from a healthy Nigerian bank. The company's financial statements and loan application had already been submitted to the bank and is awaiting approval. Extracts from property, plants, and equipment scheduled revealed the below costs and accumulated depreciation as of 2025 and 2024. A cash payment of 58 million made in respect of insurance premium for the financial year ended April 30th, 2025 was totally omitted in the books. Required. Prepare a statement of cash flow for Chukwuka Nigeria Limited for the year ended April 30th, 2025 using the direct method. B. In the context of IAS 7, statement of cash flows, explain the term cash and cash equivalents and give 2 examples. C. In accordance with IAS 1, presentation of financial statement, assets and liabilities must not be offset except when the offset is required by another standard. Required. Give the exceptions to the rule regarding offsetting provided by IAS 1.
Okay. Thank you very much, Promise. Any along that you can see your hand up. Please go ahead with your question.
Yeah, good afternoon, sir.
Good afternoon.
I'm sorry. I'm sorry. I just want to take you back a little bit. Just I don't know. Maybe I was the one that mixed it up. While I was working on the last package we solved last week. Sorry. I observed something. In the question that was with me, because I had the physical question with me, there was no revenue there. So, but in the question that you presented to us, there was revenue. Oh,
The question on ratio.
yes, sir. There was no revenue on that question. But the one that
Ratio.
you gave to us, no. Yes, sir. You know, not so revenue, like actually in the class I wanted to ask, but I felt maybe there was a mix up. Let me wait and then by the time I will go through everything, maybe I'll be able to see
No
it, but
problem. We are going to look at that. We're going to look at it. We're going to look
all
at
right,
it.
sir.
Okay.
Thank you, sir.
Please remind us when I'm done with statement of cash flows. Okay. Yeah, I can see your hand also, Lovette. Please go ahead with your question.
Sorry, sir. So I wouldn't say that I'm scared, but I don't want to use that word actually. So, sir, this cash flow is just like a combination of from everything that we just read from this question, just like a combination of a lot of IAS one. I can say property, plants and clinical, shares and all of those things. So, sir, I want to ask that since we've not been taught all of those IAS before this one. Now, how are we going to know the applications, the right applications to apply to this particular question?
Okay, so there's one thing about cash flow is there's a methodology for doing it. And you're not really applying any standard. You're not doing any measurements, you're not doing any recognition from any standard. So most of what I'll be talking about here are just basic arithmetics. Basic arithmetics. That's the approach I'm going to use to teach you. So I think you should just follow through and let's see how the journey goes. Let's see what happens in the next 1 hour. Let's see if we're going to get what I'll be talking about. So just tag along. Yeah, I can see your hand also, Gilpen. Please go ahead with your question.
Okay, so just a little to go back into the last class we had on Sunday. When we're solving the past question, I observed that the solutions, he didn't carry the name of the company. So I just wanted to ask because there was an orientation that I got that ICANN students, when they answer questions or they are solving questions in the exam, the name of the company in that question should be the very first thing that will end in their marks or stuff like that. I don't know. Is it that it is not compulsory while we practice for the exam?
Yeah, that's also a very good question, Gilpen. That's a good question. It is relevant when you're preparing statements or when you're writing reports. Okay, so not when you're asked a direct question. List, discuss, explain, calculate. Whether you write it or not, nobody's going to give you any mark for the name of the company you put on top. But when they ask you to write a memo, or you're asked to prepare a statement of cash flows, or you're asked to do an extract of a statement, or you're asked to prepare a statement of financial, so those ones you need to put the names. That's where it's particularly relevant. But if you choose to put it like in this question now, this B part of this question, they say in the context of IAS 7, explain the term cash and cash. Whether you put the name of the company or not, nobody is going to give you any focal mark. Nobody is going to give you any mark. These 4 marks is for the explanation of cash and cash equivalent and the 2 marks and the examples you have given. Or somebody asks you to compute ratios, they will not give you mark because you put the name of, no, nobody's going to give you. But when they say write a memo, they say prepare a statement of cash flows. There's a structure for that. Okay, so that's why I said your question is very, very important at this point in time. So which we're going to add there to it. Yeah. Okay. Good question so far. Any other question? Okay, so I can start solving. Thank you. Okay, so I'm going to solve A and B. C is part of what I'll teach you next week. So we're definitely going to take care of that. And you see that it's 6 marks. These are the kind of questions that make you pass in the exam. This B and C, for example, now. Any student that goes through me should get 10 over 10, yeah. You should get 10 over 10. And when you're getting 10 already, these are what really makes student pass FR, SBR, questions like this. These are the things you go for first. So now let's go on straight up to solving. Now, the A part asks us to prepare statement of cash flows for Shukoka Nigeria Limited for the year ended April 30th, 2025 using the indirect method, 20 marks. So the examiner specified the method you're supposed to use, and they always do that. So if they choose not to specify, that means you're free to use any method. So if you don't follow through with their method, so you might probably be getting out of 20, even if all are correct, you'll probably be getting maybe 12 over 20 or 13 over 20 because the operating activities alone, hence almost close to half of the mark. And that's where this indirect method comes in. So they want us to use indirect method. Like I told you earlier, well, statement of cash flows is basically statement of changes in position. If you can do all your position movements, you are done. You are done. So you just have to be patient and don't think whatever it is or the approach I'm teaching you will waste your time. You don't want to use shortcuts, you want to rush. You will not do so well. Especially if they change how the question is asked. So I also told you that they will always give us two statements of financial position, in which they did here, confirming that it's more about changes in position. So they did all of that, and they gave us additional information. You see, this additional information given to us, the additional information they are giving to us, is basically explaining those movements. Is basically explaining the movement in position. If I look through each of them one by one, all they are talking about is movement in position. So what additional information actually does for you is just makes it easier for you to identify reason for those changes in position. Like this first one now, talking about financial assets, they are telling me that the financial assets, if you look at where is financial assets here now, is on the non-current assets. After your intangible assets, you have trade investments. That's where financial asset is. Okay. So it moved from 2024, it was 2860, now 1835. That's what this guy is talking about here. That this financial asset includes a trade investment that has a carrying amount of this, but they sold it for this during the year. So that's typically telling me that they have sold some of those investments. That's telling me about the movement. That means it will have reduced from year 1 to year 2. I just need to reflect that reduction. The same thing for the additional information too. They told me that there was an issue of 3,750,000,000 shares. They issue shares. That means my equity will increase. That is just explaining the reason why my ordinary share capital, the first item on this page I'm showing you, moved from 11,250 to 15 million or to 15,000. That's what this guy is explaining. The same thing to the short-term investment. Now, this short-term investment, there's something we call cash and cash equivalent, right? Which is basically what the statement of cash flows wants to prove, wants to show the component of it, how it has moved all through the year. So at the end of the day, your statement of cash flows should be reconciled with your cash and cash equivalent. And when we say cash, if I just say cash, cash is just cash, money, whether in hand or in bank. But when I say cash equivalent, I mean something that is very close to cash, something that is easily converted to cash. That is cash equivalent. And usually IAS 7 says that cash equivalent is any assets that you can convert to cash within 19 days is a cash equivalent. It's a cash equivalent. It's cash on its own. And that's what this note 3 is telling us. That the short-term investment is highly marketable with 1 to 3 months maturity profile, meaning that it can be converted to cash within 1 to 3 months. So it is a cash equivalent. And when you look at your statement of cash flows under current assets, if you see your current asset here, we have inventories, we have trade and other receivables, we have short-term investments. That's the short-term investment they are talking about. What that note 3 is telling you is that don't worry about the movement here. That this cash, this short-term investment itself is cash. So there is no point bothering about movements, getting cash. In itself, it is cash. So don't do any movement. That's what it's telling us. That is exactly what we're going to work towards, getting that cash balance. So it is cash. It's a cash equivalent. So the cash equivalent we are therefore going to have would be this short-term investment together with the cash in hand, the item after it. Together with the cash in hand, those will be the cash equivalent. And that's exactly what that note 3 is telling us. Okay, I have another hands up. Iwere, please go ahead.
Yeah, so invariably, you're telling us that cash equivalents will be treated as cash.
Correct.
And thank you so much. Then when you were beginning at this point, when you were resolving, you told us when you were talking about 10 marks and all that. So what it means is that in answering the question, we can actually begin with B and as in the ones that are not calculation.
Fantastic. Yeah,
To
correct.
be faster. Okay. Thank you.
Correct.
Thanks.
Okay. Now, the note 4, you will see that they said during the financial year, the company paid dividend of 5.4 million to equity holders. And this has been accounted for during the year. Again, this is also explaining movements because dividends are paid from retained earnings. And if you look at your retained earnings, the fourth item on this note that I'm showing you, we have retained earnings. It moved from 13,860 to 17,925. Maybe the 17,925 should have been higher than this, but they had paid dividend out of it. Dividend has been paid out of it. So I will show you how to reconcile that. But ultimately, that note 4 is just telling us they pay dividend. That kind of items makes your life easy. Because without even the need to work out for anything, you can easily put it as dividend paid like that in your statement of cash flows because it's a cash payment. That's what we are looking for. But as much as you can do that in a question like this, there are some questions where they will not tell you that dividend was paid, that they will hide it. And in actual fact, dividend was paid. So I will tell you how to identify that in a question. I'll show you how to identify that in a question using this one. So when we see a question, that even if you are not told that dividend was paid, you should be able to identify it when you're doing your movement in position. And that's what that next note really helps us to do. It directly tells us that dividend was paid, and we can use it directly. But I would show you that even if you were not told, you should be able to arrive at this 5-4. That's exactly how I'm going to teach you. But for this question, you can just use your 5-4 directly, put it directly into your statement of cash flows. Okay. Yeah, before Ifeoluwa, the first person that raised up is her hand. Please go ahead with your question.
Okay, I was thinking about cryptocurrency. Where does it lie?
It will be an intangible asset based on the interpretation by the IFRS Interpretation Committee in 2019. It's going to be a cryptocurrency. It's going to be an intangible asset. That's where you're going to find it in a statement of financial position.
Because I was thinking about it being
Cash
yes,
equivalent.
being being convertible to cash. Yes, yes.
Yeah, I agree with you. But in defining cash equivalent, IAS 7 says that it has to be an item that have an insignificant risk of changes in value. Insignificant risk of changes in, so anything that's highly volatile that changes in value at will. Today is gaining $2,000, tomorrow is losing $5,000. That's not cash equivalent. So that's a reason why we do not put it as cash equivalent. But very good question you have asked there,
Well,
Precious.
sir, sorry, sir. Just one more. What about ordinary shares?
Ordinary shares is equity, except if you are talking about if you invest in ordinary shares.
Yes, because it can be converted to cash.
Yeah, so that's what we call financial assets. So when I'm teaching you IAS, IFRS 9, I will tell you about financial asset and also IAS 32, not cash, but a financial asset. Because there you have a contractual right to receive cash. It's not that you can, yeah, it's easily, but it's a contractual right to receive cash. So we call that a financial asset, not cash equivalent.
Thank you very much, sir.
Yeah. Yeah, Ifeoluwa, please go ahead.
All right, thank you, sir. So my question is on the additional information that talks about dividend payments. So I thought because there was a clause that says that this had been accounted for during the year, that we are probably supposed to ignore it. That was my thought, sir.
You cannot ignore it. You cannot ignore it because statement of cash flows is you are preparing it from an already prepared statement. Okay, yes, it has been accounted for in the right statement, which is usually statement of changes in equity, all right, that flows through retained earnings. So it has been accounted for there. Okay, so when you are preparing your statement of cash flows, you need to then show it in your statement of cash flows that dividend was paid, though. Right? That's what they want you to do. So you cannot therefore ignore it.
All right,
All right.
thank you, sir.
You're welcome. Now, the next item again, you see, there's a delivery van with a cost of 6.6 and a carrying amount of 3.7 was sold. This is also explaining movement in your PPE, that they sold a van. So that means you need to know that you need to reduce it from your assets. It's showing movement. Also, in note 6, this is just a trap because the whole of this note is relevant. And why is it relevant? They said the company is planning. We are working with cash. The money that has been paid, the money that has been received. Not when you are still planning. So apparently this whole note is irrelevant. Is irrelevant. So they are planning to take a loan of 2 million from a LD bank, whatever, is irrelevant. We're also given a fixed asset schedule. They broke down the assets into cost and accumulated depreciation. This is important because you would use this movement to get your depreciation for the year. It's important. It's important because if you look at 2025, the total year, the net year was 29,235, which is when you go to your statement of financial position, that first item, you see that it's 29,235. So all the others done is just to break it down for you, cost minus depreciation. And the same thing they did for 2024. So I'll show you. So, I mean, they are helping you to get what you need. So they have broken down the asset value for us into cost minus depreciation. Also, we also have a cash payment of 58 million. We're told that we have a cash payment of 58 million made in respect of insurance premium for the financial year, which was totally omitted. Oh, fine, they omitted it. You need to include it. It was totally omitted from the books. You have to include it. I'll show you how to include this as well. And that's all, basically. So the way I'm going to teach you is exactly how I would advise you to solve any question you see in statement of cash flows. You'll be able to resolve any question with this methodology. And what's the methodology? Statement of changes in position. Just give me one sec, please. Okay, now let's get to business. Now, the approach I use is I start from the first item here. And the first item here is PP. The first item here is PP. All I need is to identify the movement. That movement is the cash position that I want. That's the cash position. Because when you look at this PP, it moved from 23,475 to 29,235. If the examiner did not tell me any further detail, I can conveniently assume that the difference between the two means that the company acquired more assets. And you can confidently assume that, because that is exactly what it is in accounting. Barring the fact that, okay, yes, there can be depreciation, yeah, but at a very simplistic level, that is what it is. My assets increased. Why? Because I bought in. That is the first explanation, is that you acquire a new asset. But they gave us a breakdown of each of those items. Okay, if you look at this note 7, see what's pointing me to note 7 is because I want to start picking the movement one by one. So this PP, to get the movement, I saw that they gave me a breakdown. That's why I'm going to work with this breakdown that they gave me. Now, this breakdown, they gave me costs, they gave me accumulated depreciation. So these costs will help me get, that is really what I need for me to get the costs of the assets that was actually acquired. That is, so I'm going to work with the costs to look at the movement. The depreciation will help me get depreciation for the year. The movement in depreciation will help me get depreciation so I have to work separately. I will look at the movement in cost. I will look at the movement in depreciation. Okay. Now, before I continue, let me attend to Ewere. Please go ahead with your question.
Yeah, apologies for that. I'm asking questions. I just want to learn better. Yeah, you said the changes in the value in that statement of financial position. You know, there was an increase in 2025, means that they acquired new assets. Must it be new assets or more assets? It can be existing assets, but they just increased the value. Let's say, for instance, let's say furniture was 100, but they just, I'm giving an instance, but they just made it like 200 in next year or thereabouts. I'm just trying to understand. New asset, more asset. Did you get my question?
Yeah, I get it. I'm just trying to see how I can tell you that that question is not really so important because we really do not care.
Okay.
It doesn't even affect
You know why I asked that question? So that I don't get confused and start looking for a new item on that statement of financial position. I could look at it as, okay, more asset has been acquired of the existing assets.
Okay, no problem. That's how you should look at it, as more assets. However you want to look at it, because
Okay,
nobody
thank you,
would
sir.
really do not care. Yeah. Okay.
Okay, thank you, sir. Thanks. Yeah.
You're welcome. Okay, so let's then break it down. So the first movement I want to do is my PP. Properly plant and equipment. In doing my working, there's something we call level of rounding off. If you look at this statement, it was prepared in million. You see, they wrote millions in similar financial position too. After the year, you see naira in millions. We call that level of rounding off. So next week, when I'm teaching IAS 1, I would mention that. Okay. So we would also have to always put it in your workings. It's important. They take it very seriously. Okay. So let's get the movement. First is opening balance, okay, which is the balance at the beginning of the year. That is December 2024. December 2024. Okay, so I think so Kenny is making a suggestion. I think you know you can actually articulate it. Let's hear you so that everybody is so you can talk. You can talk, Kenny.
Good evening, sir. It's not really a question. I'm just suggesting that we have the solution first so that the questions can follow after. Because most of the questions can be in the solution so that we won't be wasting too much time.
Exactly. I agree with you. So we can do that. So we can just pay attention. Let me solve, then you ask questions. So meaning that as I'm explaining, I will have answered most of the questions that you have in your mind in my explanations to a very large extent. Okay? But you can still ask questions if you choose to. Anyways, it doesn't matter. It's just a suggestion he has made, which I agree with anyway. So let's look at the movements. So the first item here, I'm doing movement. So I start from the beginning of the year. So if you look at 2024, it was 45,795. Okay. That's at the beginning, 45,795. So if they are not giving me any information, I will just get my closing balance, or I will see expected closing balance. I will expect my closing balance to be 45,795 as well if they didn't give me any information. But they actually gave me information around maybe they bought or sold some assets. So they gave me the notes, and the notes are, if you look at note 5 here, there was a delivery van that cost 6.6 million and a carrying amount of 3,750 that was sold for 2,520. Okay, so they sold the delivery van that cost 6.6 for 2,520. Now they are telling me that a delivery van was sold. So for your information, delivery van is a PPE, is example of property, plant, and equipment. So there is a disposal. Let me call it a disposal so that you will know the asset that was disposed. Let me put it as delivery van. Okay. So if I may ask, okay, let me ask the guy that has been asking me so many questions. Let me to ask a question. Now, are we going to add this disposal? Are we going to deduct it or add it to this opening?
Yeah, we would deduct it.
Oh, fantastic. Good. Good. So we will deduct it. Amarachi is asking a question. I really do not get it. So you can speak up. We will deduct it. While we are waiting for her to speak up, please go
Can
ahead
I go?
if you can. Yes, please.
Looking at that clause during the year, so how can we determine if it's 2024 or 2025?
It's the current year. Anytime you see during the financial year, it's definitely the current year. So
Okay.
it's definitely the current year. Okay, so now Iwere said we would deduct it, but there are three figures here. They give me cost of the assets. They gave me carrying amount of the assets. They give me sales proceeds of the assets. So which one am I going to deduct?
Carrying amount, to my opinion, because the original cost is what they bought it for. Carrying amount means depreciation has happened over the years. My thinking, I don't know if I'm correct.
Maybe you have been whining us. You that you say you don't know anything, you don't think anything. So you know the position. That's carrying
No,
amount.
I don't know. I'm an old man, so it's been a long I did accounting. So
It's okay. All right, that's a good attempt. Is there any other person, any other attempts? what are we deducting? He said we should deduct 3,750, but they give us cost, they give us carrying amount, they give us sales proceeds. What are we deducting? I just need one or two more people to confirm what Ewere has said.
Sir,
Good evening.
Amount.
sir, I think carrying amount.
Okay, you agree with Ewere carrying amount. Okay.
It's the original cost.
Original cost. So you are going against everybody and along that. So I need to hear from you. What's your thinking? Ah, there's a noise in your background. Hello, Atun. So I won't allow you to
Okay.
speak for them.
Okay. Okay.
No worry. So you can actually mute. There's noise in your background.
Yes, I'll remove it. Okay, I think it's my neighbor.
All right. So he's actually correct. What you deduct is the cost. And the only reason, because you can, those that say carrying amount can also be correct though. You can also be correct, and I will show you why. But the only reason why it's correct in this instance is because we are working with the costs. I said I'm going to do movement in costs and movements in accumulated depreciation separately. And that's why instead of picking 23,475, can you all see it in this breakdown that they gave me in note 7? Instead of picking 23,475, I said I want to work separately. I want to work with the cost. I picked 45,795, which is the cost. So whatever will have cost movement between these two cannot be the carrying amount, is the cost. So it's the cost I'm going to pick, not the carrying amount. If I had decided to work with the carrying amount, which I will show you also, I will have used this 3,750. I will have used this 3,750. And I'm so happy because nobody said sales proceeds. I'm happy because if you had said sales proceeds, that's so far from the answer. That's so far because sales proceeds does not even go to asset account. Exactly. It's just debit bank, crediting disposal account. When I teach you PP, you're going to get that point. But I mean, logically, it's going to be the cost in this instance. Not that it cannot be the carrying amount. It depends on what we are working with. And that's the only reason why what I'm going to deduct here is the 6,600. That's the only reason. Otherwise, I will have deducted 3,750. And that is the only movement. As far as this additional information is concerned, that's the only movement that I was told about. That's the only movement. Or can you see any other one? Me, I can see one more, but let me just give anybody opportunity to see it as well. Okay, so another one I'm seeing is here. In my equity section, I can see that there was a revaluation reserve. There is a revaluation reserve. The revaluation reserve moved from 9,195 to 11,280. I can't see it in P&L because they didn't give me OCI. But there was a revaluation reserve. Now, we are going to learn very soon that assets can also be revalued. In fact, the reason why you find evaluation reserve here is if an asset is revalued. So usually beyond buying new assets or selling assets, assets can also be revalued. So you should always look out for if this has moved. That means that asset was also revalued. They were silent about it. In some questions, they will tell you that the company revalued their assets. So that it is like telling you indirectly that you should consider it in your workings. But here they were silent. But always watch out if there is any movement in your evaluation reserve. It means that asset was revalued. So can you help me get the difference between this 11,218 and 9195?
2085.
2085.
Okay, 2085. So in our movements, there was a revaluation surplus. Said it would be an addition because it increased. Just so that you will know, let me just put the workings there for you. Is the difference between 11,280 and 9195. 11,280, 9195. Okay, and that's all our movements. So can you tell me, what am I expecting my closing balance to be? What should my closing balance be?
41,280.
41,280. That is my expected closing balance. But what was my actual closing balance? Yeah, Amarachi, please go ahead.
I'm confused. Are we still talking about the PPA? What's the revaluation reserve doing there?
Okay, I'm just going to repeat what I've mentioned before because I've explained. This is your question. I said that what causes movement in PPE is also revaluation of the assets, meaning that in addition to whether you sold an asset or buy an asset, which obviously will be reasons why your PPE would increase or decrease. Okay, I said in addition to that, one thing you should always look out for is revaluation, because we also revalue PPE. It causes movement. When you revalue your assets, the value will go up. So, and the way I'm able to know is because when you check your equity, that's where reserve. Equity is share capital plus reserve. So if you see evaluation reserve and you see that it has moved, that shows that your PPE was revalued. That shows that it was revalued. And that's why I asked for the difference between the two, which I was told 2085. That's why I'm adding it, because it's part of the reason why it's part of the movement in PPA. So this 2085, and that's why it's there. I don't know if I answered your question.
Yes, I get it now. That assets must have been revalued during the year.
Yes, it must have been revalued during the year. Okay, please always pay attention to that. So what's my actual closing balance then? What's my actual closing balance? Can tell me?
The
Of my
55 million, 5.3.
Yeah.
29.
If what did you say? Say it now.
55395.
Okay. Okay, 55395.
55395.
Okay. Is it 295 or 395? Okay, 395. Okay, so there's a problem here. Based on the movements we did, our closing balance was 41,280. But what we have there is this. What will have caused it? Simple. It means there was an addition. It means we bought more assets. Addition or acquisition of PPE. And how much is that?
14,115. 14,115.
And this will go to my statement of cash flows. This will go to my statement of cash flows. So when I talk about statement of changes in position, this is what I'm talking about. This is what we are going to be doing. So the one that is very tasking out of all of them is usually this PPE. All the other one is easy. It's very easy because PPE has a lot of things to it. Like we saw evaluation now. There's even depreciation that we're going to also do. Aside this PP, every other one is very easy because nothing much happens in between. Nothing much. Unlike PP that will have disposal, addition, evaluation, depreciation, like that. But this is pretty more like what you find in most cases. Please go ahead with your question.
So much so far. It's flowing. I just wanted to ask, like in exam hall, we can just, put the format in just this way that you're putting it. Like the last one now, you said addition, acquisition of PPE after 14,105, you put a hyphen SOCF, statement of cash flow. You can do it like that, like in exam, no issues about that, showing your workings.
Yeah, of course. So I'm putting it here at least so that I will remember when I'm preparing my statements that, okay, this one
So, but if I put it like that, the way you're doing it, that is the way I'm understanding it. So I'm going to just operate that same way. So it doesn't make a meaning. Like after the 14,000, I'll just put hyphen SOCF.
Yes, please.
Okay, sir. Thank you.
You're welcome. Okay, so having gotten that, I've worked with the costs, which is okay. I need to work with my accumulated depreciation also. So the aim of this is just to get my depreciation for the year. That's the only reason why I'm doing it, because I will need it. I'm doing indirect method. If I was doing direct method, I'm not going to do this because I don't need depreciation for direct method. I don't need it. So I wouldn't have even come here at all. I will just work with this guy and move on. But direct method I actually need it. At the same time, I can check my P&L and see if they give me depreciation as a line item, as a separate line item. Of course, they hardly would not. They mostly do not do that. So they did not. So I really need my depreciation for the year. So that's the only reason I'm doing this, because I need it. So what's my opening balance of my depreciation? That's 22,320. 22,320. Then so depreciation follows the same pattern as acquisition. I will just walk through based on the information given to me in the question. They didn't give me much around depreciation. The only thing I can work with is still this note 5, where they gave me information around that delivery van. So I can get depreciation there. But the depreciation I can get there is not depreciation for the year, but depreciation on the asset that was sold. Because when an asset is sold, I've removed the cost from the cost of the assets. I also need to remove the depreciation also because this asset has been sold. So since the original cost of this asset is 6.6 million and the carrying amount is 3.75, the difference between the cost and the carrying amount would give me the depreciation on this asset that was sold. So who can tell me what's the difference?
2,850,000.
2,850,000. Okay, 2,850,000. So just so that you'd remember, is 6.6 million minus 3,750, I guess. Okay, so that's my disposal, and that's all I have for I don't have any other thing that gives me any clue on depreciation anymore. So my expected closing balance is how much? So if you compare these two, what's the difference?
19,470,000.
Am I correct?
Yeah. No, 470.
No, 470.
Okay, 470. Okay, but what was my actual closing balance? What was my actual closing balance from this schedule?
26,100,000. 616.
26,160. Okay, so there is an increase. Do you know why? That's the depreciation for the year. That's why it's increased. That's my depreciation for the year. So how much is that?
6,690,000.
Okay, I will need it in my statement of cash flows. It's a non-cash items because I'm doing indirect method. You would really understand this better when I'm done with. So, I've already told you the reason I'm doing this is just so that I can get this depreciation for the year. I really need it because the non-cash items I will need to adjust for my profit. So I'm going to show you that very soon. But at least I've done that. Now that's my workings too. So ordinarily I should be done, but you cannot be done because whenever an asset is sold, whenever you have disposal, there will always be profit or loss on disposal,
On disposal. Okay.
which is a non-cash item, which is a non-cash item. So you have to determine that profit or loss on disposal. So I need to do my profit or loss on disposal, which is simply the sales proceeds. How much I collected is the sales proceeds, which is the cash item. This definitely is a candidate of statement of cash flows. So you need to understand as a reporting student that when you sell, the money you actually receive is what we call sales proceeds. They will always give it to you, right? It's different from the
Yeah.
historical cost of that asset, and it's different from the profit that you made on the sales. They are all different. So for me to get a profit or loss, I'm going to compare what I actually received with the carrying amount, not the costs, with the book value or carrying amount. You're not comparing it with the cost, but with the book value, because that's the value of the asset today at the date of disposal. And all these I was given because I was told the cost of the asset still on that note 5. I was told that this asset that was sold cost 6.6 million. I was given the carrying amount as 3,750, and I was given the sales proceeds as 2,520. So the sales proceeds is 2,520. The carrying amount is 3,750. So I will compare the two and get a difference. And how much is this difference?
1,230.
1,230
Adverse.
adverse. We don't call it adverse here. What do we call it in reporting?
Okay, loss on disposal, have you?
Yeah, loss on disposal. So you see, this one, it goes to my statement of cash flows because it's a cash item. This one, loss on disposal, I will need it also to adjust my profit because it's in my expense, but it's a non-cash item. I would also need it. And that is all the workings as far as PP is concerned. So this is one of the most difficult movement identification in cash flows. If you can master this, there is really no movement you will not be able to do. This is the most technical one. Every other one you will see is easy peasy. It's very straightforward. It's just this one that you have to make a lot of effort. Okay. Now I can accept questions now. Okay, please go ahead. The first person.
Thank you, sir. I'm wondering why you are not having this loss on disposal in bracket.
Oh, okay. You want me to have it in bracket? I'm going to
No, I
definitely
don't know
have it
whether
in
it's
bracket.
okay, sir. Thank you.
Yes, yeah, because it's irrelevant whether you put it in bracket or you don't put it in bracket, it doesn't matter. If I could choose not to even put this one that I put in bracket, I could choose not to put, in as much as you know exactly what you're doing. Okay, I know it's a non-cash, I know it's a loss. I've described it properly in my workings, and if I can tweet it appropriately in my solution,
Okay.
yeah, then you'll be fine. Yeah, somebody identified an error in the question. Somebody identify an error in this question. This V, you see, the root 3750 billion is an error for my candidate diet. So it is, you should be able to figure that out, that it is an error. Yeah, please go ahead with your question, Irabo.
No, I don't. I think that was what you just addressed now.
Oh, okay. All right. Amarachi, please go ahead.
Okay, sir. I'm still finding it. I don't understand that depreciation part. The one that I don't understand that we have an actual closing balance of 26,160,000. Then we got the depreciation for the year 6,690,000. I don't understand. I don't understand that depreciation for the year.
Okay.
And is a negative figure, right? I don't understand
You
it.
need to
Actual.
ignore whether it's negative, whether all those things are irrelevant. What you need to understand now, just have an understanding that when there is an increase in depreciation, that's depreciation for the year. That's depreciation for the year because from the movements we did, we started from the opening balance. From the information the examiner gave us, we were able to get a depreciation on the asset that was disposed. All things being equal, the balance we should get here should be that 26,160. But it wasn't. It was 19,470. We're expecting 19,470, but the closing balance was actually 26,160, which means that there's something that must have caused the difference and is depreciation for the year. So
Okay, so we cannot recognize 26,160 in the cash flow when dealing with statements of cash flow. It is 9.
Exactly. So it's the changes we're going to capture. That's why I said it's a changes in position statement. That was the first thing I mentioned. So this one is cumulative from the beginning till date. What we need is for this year is changes. So this is the changes. This is the depreciation that will have gone to P&L most likely in administrative expense, and is a non-cash item. So the only reason why I'm needing it, I also mentioned this, that is because the examiner asked me for indirect method. And indirect requires that you are going to adjust your profit for non-cash items. And that's why I have to go through this effort to do this. If it was direct, I'm not going to do this because I don't need depreciation, right? So having done this, I need my depreciation for the year, which is this movement between what I expected as closing and what was actually the closing in my books, knowing that, okay, for it to have increased, that means there was depreciation for the year. I will then use that to adjust my profit because it's already in P&L under administrative expense. Okay? Yeah. Let me have further question. Next person. Please go ahead, the next person. Anybody can. Shola, go ahead. I can see
Good
your
afternoon,
hand.
sir.
Yeah, good afternoon.
Yep. So, my own question is on the revaluation surplus.
Okay.
So, since we are having surplus here now, what happens if we have deficit? How are we going to treat it? Are we going to be deducting or something?
Exactly.
Okay.
We'll deduct.
Okay, thank you, sir.
You're welcome. Next person.
Yeah, thank you so much. My question is on the depreciation. So what it means now from this expected closing balance of 19,470, that is what is supposed to be ideally. Then actual closing balance is 26,160. So that means we have, additional depreciation probably in that happened over that year, probably in other places that may have reduced our value somehow.
Exactly.
Okay,
That's
sir.
what it is. Yeah.
Okay. Thank you.
Okay.
But we don't know what it is for now, Sha.
Yeah, we don't really need to. All I want is my depreciation value. And I move on.
Oh, okay. Okay.
Yeah.
Thank you so much.
Okay.
Thanks.
Any other question? Okay, please just give me 1
Sorry,
minute,
sir.
huh? Yeah, go ahead, please.
I have a question. If they really give us like the depreciation for as per the rate, maybe 50%, we don't have to do this accumulated depreciation method, right?
Yeah, you might not have to do it. You might not have to do it because maybe you might not, but they don't give it like that. You will not find a question like that. They want you to do this. You have to do these movements because it won't be that straightforward. There will be disposal and all of that. So these movements will still be particularly important in most cases. Okay, I am back. So we are done with PPE movements. Now, every other one is easy peasy. Now, let's go to the second one, which is intangible assets. So, and if you look at in the additional information, they did not tell me any reason why maybe there was an addition, they didn't tell me. So it therefore becomes very easy for me to determine movement there. For tangible assets, so it means that my opening balance, how much is my opening balance for intangible assets? How much is it? Anybody?
16,300,000.
16,300.
300. So how much is my closing? 18,775. 18,775. So this is an increase. An increase is simply acquisition of intangible assets. So how much is the increase?
2,475,000.
It goes to where? An estimate of cash flows. Okay. It goes to my statement of cash flows. So I move to the next one, which is trade investments. That also moved from 2860 to 1835. So trade investments, not 5. My opening balance is 2860. The first thing I would check is did the information tell me reasons for movements? Yeah, they did in note 1. They talked about a trade investment with a carrying amount of 1.5 that was sold for 1885 during the year. So that means there was a disposal during the year for this trade investment. So I would have my disposal. Now, this disposal, like we did for PPE, we are going to deduct it. But now, what are we deducting here? Are we deducting carrying amount or these sales proceeds of 1885? Which of them are we deducting here? Anybody?
I think we are deducting the carrying amount because
That's correct.
carrying amount
That's
is what you had. Then the sales is what you whatever give it out. So carrying amount is what was in your book.
Exactly. Exactly. This guy was whining us saying, I don't know anything, I don't know anything.
No, I not sabi really. I left accounting like 2002. I'm an old man, so needs has brought me to come and
It's
do
okay.
this stuff. Yeah, thank you, sir.
Yeah, it's okay. I think
It's
we're
just
going
that
to
you're teaching it very well, so I'm picking.
No,
So
thank you very much.
yeah.
Okay. So the carrying amount is 1,500. I will deduct it, 1,500. So what was my expected closing balance? I expect my closing balance to be
1 million.
1,360. 1,360,000.
360. But what was the actual closing balance? What was the actual closing balance? Let's see. My intangible assets. I see intangible asset, trade investments. My actual trading closing balance was 1835.
Yeah.
1835. 1835. Okay. So it's increased.
Yeah.
So this therefore means that there was an acquisition of trade investments. So how much is that?
475,000.
So it goes to my statement of cash flow. Acquisition of this. However, anytime there is a disposal, you need to calculate profit or loss on disposal, just like we did for PP. Profit or loss on disposal. So where we're going to compare my sales proceeds with the carrying amount. So in this case, how much was the sales proceeds? They were told that they sold it for
1,500.
No, it was sold for 1885.
Yeah. Okay.
It was sold for 1885. And my carrying amount from here was 15. That was the carrying amount of what was sold. So what was the difference?
385.
385. Is this 385 a loss or a gain?
Again.
Yeah, the
It's
profit
again.
on disposal. I would need it. It's a cash item. I will need it in the statement of cash flows. Okay, so this is not different. Somebody is asking me to explain the trade investment again. Yeah, of course I can, but this is no different from what I've explained before. I'm just doing movements. I got my opening balance. I saw that in note 1, I was told that they sold some investments. They sold some investments. I saw that they sold some investments, so that's why I came to remove it here. And I ensure that I remove the carrying amount because this itself is carrying amount. So I got my expected closing, but my actual was this in my statement of financial position. So that means there's an increase in trade investments, which is an acquisition, right? You see that I didn't take this carrying amount to cash flow because it's book value. It doesn't go to cash flow. What actually goes to cash flows is this sales proceeds, what I actually received. So I got my profit or loss on disposal. Together, I compare my sales proceeds with my carrying amount. I get my profit on disposal, which I will go and adjust as a non-cash item also. Okay, and that's note 5. Okay, Aisha, with you. Please go ahead with your question.
Thank you, sir. Under this note 5, you said the difference is acquisition on trade investment. Is there any situation where we can also have it as return on investment, the difference? No.
Yeah.
Thank you.
So what you can have it as is disposal.
Thank you,
Okay.
sir. Thank you.
It's either is acquisition or disposal. Either of the two. Okay. So I'm done with my trade investments. The next one is inventory. The next movement I'm doing is my inventory. Some of you might say that, this will take time, this will take time, You are so wrong. You are so wrong. Because as soon as you're able to do this, if you don't do this, that means you just be doing trial and error. You want to do shortcut. And this does not actually take time if you know what you're doing. And a 20 marks question, if I multiply 20 times 1.8, so I have like 36 minutes. So this movement alone I don't expect it to take you 20 minutes if you know exactly what you're doing. If you have read the question, 20 minutes is a lot. And as soon as you are done with this movement, it's as good as you are done. Because all your solution, you are just picking it. You're just picking. You will have done everything that you need in this movement. So what was the opening inventory? 7875. 7875. Then what was my closing balance? My closing balance was 11,550. Because they didn't tell me anything about inventory. So since it increased, this will be addition or acquisition, or acquisition of inventory. So
3675.
3675. Number 8 is trade receivables. What was my opening balance and my closing balance? My opening balance was 25,335. Somebody should cram this to 31,440. I'm cramming 25,335. 25,335. Oh yeah, what was this one?
31,440.
It's 1,440.
Thank you. So it's increased. So that is addition or acquisition of receivables. So what is the difference? What is the increase?
6,100,000.
One. Yeah. Go ahead. Yeah.
105.
Correct.
Okay.
Yes. Correct.
All right. So number 9. So I already explained this short-term investment to you because the examiner already told us that it's going to mature within 30 to 90 days, 1 to 3 months. So it's a cash equivalent. You don't need to capture the movement because this balance of 3810 in itself is the cash, not the movement. The 3810 itself is the cash. The same thing applies to the cash in hand. The 930 itself is the cash. You don't need to consider the movement here. So we move on to ordinary share capital. So my ordinary share capital what's my opening balance?
11,250.
11,250. Did they tell us anything about movement in share capital? Yes, they did. So there was an issue of shares during the year at a premium of 32 kobo. So they issued 3,750 shares. How much? 3,750,000,000. Okay, 3,750. So issue of shares 3,750. Okay, so this is the number of shares. What goes to share capital is nominal value. Okay, so what's the nominal value of the shares? If you look at, we have ordinary share capital of 1 naira each. Okay, so that's the nominal value. So I'll multiply this by 1 naira. Okay, so it still gives me 3,750. So what's my expected closing balance? Can you help me add it?
15,000.
15,000.
15,000. Yes.
Okay. But what's my actual closing balance?
It's 15,000.
It's also 15,000. Fine. So this one, everything balances out. Okay. Yeah. Please go ahead with your question. I can see your hand here.
Thank you. This question might be funny, kind of, but just permit me. How do I know now in an exam hall these various items that you're solving for 1, 2, 3, 4, 5 down to 9, and now we are entering 10? Is it that every item on the statement of financial positions I would solve on it based on the additional information? Did you
Yes.
get?
Yes, of course. I'm picking it one by one. It's sequential. I'm just going from one item to the other, guessing the movement.
Okay.
That's all I'm doing. So the one that they give me any information on, I will consider it. The one they did not, like when I was doing inventory, they didn't give me, when I was doing intangible assets, they didn't tell me anything. The movement, I captured it as acquisition because it's increased. The same thing for inventory it's increased. Trade receivables, it's increased. When I got here, I saw that it told me the issue, something like that.
So for every item on that statement of financial position, I must solve for it to get the actual value.
You have to.
Thank you, sir.
Otherwise, your statement of your statement of cash flows is not going to be balanced.
Okay. Thank you so much. I appreciate it.
So, opening balance. What's my opening balance? 9,300.
9,300.
Okay, yeah. Lest I forget, this is going to statement of cash flows. This issue of shares here. Irabo, please go ahead. I can see your hand up.
Okay. Mine is not really a question, it's just a request. I don't know if it'll be too much. Places where we pick, where we had to go to additional information to pick, an additional information pool, the items we are picking from the book. How about we just put in brackets, add info, either 1 or Roman figure 1, Roman figure 2. That way, when we are going back to the note, we can know where we went to pick this figure from and how we adjusted for it or why we are adjusting for it.
Yeah, I think that's a
I don't know.
very intelligent suggestion. That's a very intelligent suggestion. Yeah. So it's easy for you to revise. So you really don't have to do that in the exam. It's not necessary. Okay, I think I'll start doing that now. Okay. So for the premium, you see that this shares was issued at a premium of 32 kobo. Okay. So since I'm being told that, so 0.32. So how much is that?
1, 2.
So I wrote note 3 because this issue of shares is coming from note 2. It was coming from note 2. Note 2. Okay, if this is 1, 2, so how much is the expected closing?
10,500.
10,000. So what's my actual closing balance? It's the same. 10,500.
1,500.
Yeah, Iwe, I can see your hand. Please ask a question.
Yeah, please. Apologies again. On this item number 9, in the issue of shares, you said 3,750 times 1. So you assume that the nominal value of the share is 1 naira, not 50 kobo.
Yes, it is 1 naira because they told me in the question that it is
Okay,
1
was
naira.
it stated in the question? Okay.
Yes, if you look at the first item here, ordinary share capital of 1 naira each.
Oh, okay,
So
okay.
this 1 naira is the nominal value. So
Value.
Kehinde,
Okay, thank you so much.
yeah, good. So Kehinde, you'd ask a question. That's if Feoluwa say, I thought the idea of a premium is greater than the nominal value, which is 1 naira. I really do not get your question. What are you trying to drive at?
Okay, sir. So I was just trying to get some clarity, right? Because when I hear share premium, what comes to my mind is that it's greater than the nominal value, which is 1 naira. But in this question, they're saying that the share premium is at 32 kobo. So I'm just trying the logic behind it.
If I get you, you're assuming that premium should always be 1 naira. No, that's not right. Premium can be any amount depending on the issue price. And this question is magnanimous enough to give you the premium. Again, nominal value can also be any amount depending on what you are given in the question. In this question, they give us the nominal value as 1 naira. It doesn't necessarily have to be 1 naira. It could be 50 kobo. It could be any amount given. But they will always put it in front of the item, in front of the share capital. They always put it, the ordinary share capital at 1 naira, at 50 kobo, at 2 naira. It will always be there. So any amount above the nominal value is the premium. In this case, the total is 32 kobo, which is the premium. All right. Yeah, Shola, I can see your hand, please. Go ahead.
Okay, sir. I think Kenny was talking about, she was actually talking about the premium in the sense that that amount given there, she added it with the nominal value instead of have to just pick the nominal value. I mean the premium. The premium, I'm talking about the premium. So she added the two. Now thinking that the addition of the two should be what you should pick.
No, that's not what you're going to pick. That's the issue price. That's going to be the issue price. Okay. So when they issue shares, it's issued at an issue price, which is really different from the nominal value. Nominal value is established at the point of registration with CAC. So you can decide on, it could either be 50 kobo, 75 kobo, 1 naira. You're free to choose whatever nominal value. It's just to establish your base amount for your share capital. When you are actually then issuing your shares, you can issue it at any price. So when you issue shares at a price, or the share capital you have raised is above what you have with your registration with CAC, that's, you must have issued it at a premium. So we usually separate the share capital value, where what goes there is just the nominal value, from the excess money you have collected as a result of you issuing it at a price over and above the nominal value, which is the share premium. And the question was very clear. He told us that there was an issue of 3,750 million shares during the year at a premium of 32 kobo. Okay, so when they present it this way, So at a premium, mean that's the extra amount over the nominal value, not the two, never. It's very clear. That's how it is. And that's how it will always be. At a premium means that's the extra amount collected beyond what the nominal value of the shares is. Okay. Yeah, please go ahead with your question. You can see your hand.
Yeah, thank you so far. So it can actually still be, it's possible that the question might say the shares were issued at a discount. That means it's going to be at a deduction. Opening balance, you less the discount, the share discount. Is it possible or just premium?
Never would they give
Given the
you,
settings of the
never would any company issue shares at a discount.
Okay.
So don't let us even go there. ICANN will never ask you that. They will never even bring that up.
Okay. Thank you.
You're welcome. So moving on. After premium is revaluation reserve, we had already treated this revaluation reserve. I've already done the movements already, and I've treated it in PPA. Retained earnings. The examiner is magnanimous enough to have told you the solution to this, which is always dividend. Okay, so let's identify the movement. Yeah, Ahmed, please, you can ask a question.
Okay, thank you. It's still on the issuance of shares and price premium or discounts. I just needed to throw more light as regards on the opposition as regards right issue, because I believe most companies issue shares to existing shareholders at a discount. I don't know where that position lies within your explanation.
All right, good question. So that's not issuing it at a discount. The context here is discount to nominal value. Okay, that's the context of this share premium. So share premium is premium over nominal value. Share discount is discount over vis-a-vis nominal value. It's not practical. Nobody will do that. Nobody will issue share. So in the context of right issue, that's in respect to the issue price, the existing issue price of the company. So it's just a way of raising additional money from existing shareholders. So that our market price, which is of course will be higher than your nominal value, is let's say 20 naira. So they can issue it at a right price of 15 naira. Even at that, if you ask your SFM lecturer or those in investment banking, they will tell you that the impact of that is the share price of the company will now come down. So when I'm teaching EPS, I will teach you something around theoretical X-right price, which is now what the company's shares will fall to. Because when you are issuing your shares at a discount to existing market price, is a signal to investors that your shares is not actually what it is on the market. So to answer your question directly, right issue is discount to market price, which is different in context to what we are looking at here. Okay. All right, moving on. So how much is the opening balance of my retained earnings?
13,860.
So they didn't tell me anything around retained earnings. So let me assume that I don't know. Okay. And I expect every one of you to know that what will cause increase or decrease in retained earnings is profit or loss for the year. Okay. Ahmed, do you still want to ask your question or the initial hand that was up?
Sorry, it's old hand. I'll take it down.
All right. So Alimat, I can see that you're asking a question. It's better you talk. Oh. Just better you just talk. So what's our profit for the year? Who can tell me what's the profit for the year? That's 9465, right?
Yeah, 9465.
Yes.
9465. And that's really it. Okay. Yeah, let me follow this route. So what's my expected closing?
23,325.
What's the actual closing balance? What's the actual closing balance? That's 17,925.
17,925.
17,925.
So what's the difference?
5,400.
Who can tell me what's this 5,400?
Dividends paid.
The dividend paid out.
Thank you very much. Dividend, these are you actually determine dividend paid out. But this guy was so magnanimous that he gave you. So meaning that he has saved you these whole workings, this whole movement. And immediately they give you dividend. That means you don't really need to do that workings, except if the examiner doesn't know what he's doing. Because if you look at this note 4, they already gave me this 5,400. They already gave me the movement of this dividend. So ordinarily, I will not even stress on this because that's really the importance of movements in retained earnings. Is dividend paid ultimately. Okay. So that's all for my retained earnings. Loan notes, 10% loan notes, which is note 12. What's the opening balance?
6,500.
6,005. What's the closing balance?
12,780.
12,780. What's the difference?
6,280.
So what did you say is the difference?
6,280.
6,068, yeah, 6,280,000.
What does this difference, what does it represent?
Interest paid.
No, it fell lower. It's not interest paid. It's not interest paid at
Additional loan.
all. Thank you very
Yeah.
much. Thank you very much. Additional loan. That's what it is. So don't just imply, don't imply answer. First, keep it simple. Your loan not increase, additional loan. Don't imply, don't assume it could, there's one complexity behind it. No, it's as straightforward as it is. Additional loan. So when it goes to statement of cash flows, this one goes to statement of cash flows. Okay. So that's that. Yeah. So what's left? After that additional loan, they didn't give us any addition. The only additional note they gave me is note 6, which I told you is irrelevant. They are planning to get loan. Doesn't affect anything here. Now I can see deferred tax here. So deferred tax will go hand in hand with current tax. Okay. So, and this is still movement we do there for those taxes. So together, deferred tax and current tax, together they are called income tax. Okay, I'll teach you IAS 12 later. So opening balance, I will have my deferred tax and I have my current tax for the opening balances. So how much was the opening balance of my deferred tax?
3,750.
3,750. And what about my current tax?
8,460.
8,460. So 3,750, 8,460. 3,750, 8,460. What's the addition of the two? What was the addition of the two?
12,210,000.
12, 20, yeah,
12,210,000.
12 million.
12 million to 10. So did they tell me about anything that happened in the additional information? No. Okay. The only thing they told me is just in my P&L. In my P&L, I can see there is income tax and deferred tax in P&L. So I can work with that as what happened for the year as an increase in tax for the year, so which is 8,850. Okay. So my income tax expense, Sandra, I can see and can actually ask a question, is 8,850. So ordinarily,
This
yes, please go ahead,
this loan,
Sandra.
yes, this loan notes, is it 12% or 10%?
I think it's
From the question,
10%. It's
Okay.
10%.
All right, thank you very much. 10%. So can you please add these two together to get my expected closing balance? Thank you, Sandra.
21,060,000. Yes.
Okay. So what's my actual closing balance? Deferred. Correct. All my deferred and current closing. Deferred was 1.5 and
Deferred
current
was
was
5. Current is
9,250.
9,240.
Okay.
Abi?
1.5. 9,240. So what's the addition?
10,740.
Okay. So it decreased. So what's the decrease? What's the difference between these two?
10,320.
10,320. So this 10,320, this decrease in tax now, the expected was 2160. The actual closing was 10,740. What does this represent?
Tax payment.
Thank you very much. That's tax paid. That's the only reason why your tax liability will reduce. You actually paid tax. So tax paid. So that goes to my statement of cash flows. That goes to my statement of cash flows. Okay. And the last item is my trade and other payables, 9,150, 1210. That's note 14. Trade and other payables. What was the opening balance? Who can tell me?
Trade and other pays 9,150.
9,150. What was the closing?
12,810.
12,810. What was the difference?
3660.
You said 3360, you said?
No,
36.
3660. 3660.
Oh, okay. Okay, I'm done with my movements. So it's as good as I'm done with my main question. So let's prepare our statements. What's the name of this company? Shukuka Nigeria Limited. Shukuka Nigeria Limited. Statement of cash flows using indirect method. For the year ended. Which month again? April 30th, 2025. April 30th, 2025. April 30th, 2025. So you see that I did not move to bank overdraft because bank overdraft also is a cash equivalent. Okay, that was why I ignored it because it is a cash equivalent in itself. That's the only item I did. So I will treat this 6540 as cash in itself. Okay, so using indirect method, like I explained to you, okay, is in these notes that the difference between this method, direct and indirect, appears under the operating activities because they are the same for investing and financing. Except for direct method, we adjust each item in the statement of profit or loss for its cash items. While for indirect method, we adjust the profit before tax or the profit before interest and tax for non-cash items. And that's what we are doing really. So it's either here, they didn't give us my profit before interest and tax. So I'm going to work with profit before tax. Okay, I'll be working with my PBT. So for my PBT, how much is my profit before tax here? You can tell me?
18,315.
My profit before tax is 18,315. 18,315. So I would adjustment for non-cash items. That's basically what I want to do. However, there's something that I need to inform you about, which is this one. This finance cost here. So the way I do it is that finance costs, I always deal with it under financing activities, right? Except otherwise stated. Because finance costs, I want to believe is arises from borrowing money. So it arises from financing. So I always deal with it in financing. Okay. So usually I will just adjust for it first before I go to non-cash item. I will not deal with it as a non-cash item. I will deal with it as an adjustment, as a reclassification. I deal with it as I'm taking it away. That okay, I don't want to deal with it here. I want to go and deal with it in my financing. So this 5220 that was deducted from here, what I will do is I will add it back. I will add it back. Let me go back. It's like I'm going before it. I'm starting from PBIT. It takes me back to my PBIT. If I'm starting from my PBIT, then I will not need to do that because finance costs wouldn't have been deducted. So when I get to my financing, I will deal with it appropriately. That's how I would advise that you do. Take it away from the profit. It takes you back to PBIT. So you're not dealing, you go and deal with it in financing. Okay? So this 5220, I'm adding it back. Whatever you get is like it's taking you back to your profits before interest, and it gives you that. So how much is this?
23,535.
Okay. Now, let me then adjust my non-cash items. Let me adjust my non-cash items. So all my non-cash items will be one, the non-cash item in admin, interest received too. I will not touch it. Our interest received, I want to believe interest received is coming up from investment. When you invest, you collect interest. Okay. So the same thing I did to finance costs. I will always want to do it to interest received. Let me do the same thing to interest received. Because I will go and treat it in investing. So let me do the same thing here. My interest received. It was added. I deduct it. 1,670. So how much is this?
$21,865.
Okay, 21,865. Okay. Now, all I need now is to adjust for non-cash items. And I need to adjust for non-cash items in admin, in cost of sales, and in revenue. And I've already done all of that already. I've identified all those non-cash items. For admin, majorly it will be those depreciation and those profit or loss on disposals that I identified already. I just need to bring them here. For cost of sales, the non-cash items here will be basically my movement in inventories, my movement in receivables, my movement in payables. Those are non-cash items because they are not cash. Okay? Cost of sales now, inventory, if inventory goes up, is a non-cash item. My cost of sales, if my receivables should increase, it means people did not pay. If my payables should increase, it means people did not pay. That's what it means. So before I get there, for the admin first, here, let me take care of one, this depreciation from note 1. Depreciation from note 1, depreciation for the year. This is it note 1 or note 2? From note 2. Now, this depreciation now is an expense. Is an expense. Depreciation is in admin expense. And usually expense will have been deducted before getting to these profits. The deduct expense. To adjust for it, I'll just do the reverse. I add it back. I've removed that expense from the profit because they have deducted it before to get these profits. I'm saying that this item is a non-cash. You shouldn't have deducted it. It's non-cash. Just add it back. You have turned it to 0. So I add this back. The same thing, my next item, which is in note 3, this loss on disposal of 1,230. Loss on disposal. Again, loss on disposal is an expense as well. It will have been deducted. I add it back. That came from notes 3. The same thing for after that, I have this profit on disposal of investments of 385. What note was that?
Okay.
Is it note 6 or note 5? Note 6, yeah. 385. So this is an income, it will have been added, deducted. Yeah. So those are majorly those non-cash items. Now, for these other guys, which is usually the non-cash items that will be in admin, this is like the maximum of it. For this cost of sales and revenue, the non-cash items there are inventory, receivables, and payables. So the templates usually, because they are items of working capital, they are items of working capital. So the templates from IAS 7 calls them changes in working capital. They are actually non-cash items, but they just call them changes in working capital, which is okay. We can also call it those. So we have already done all those movements. I did addition, inventory increased. So if inventory should increase, is that inflow or outflow? Is outflow. Is as good as you are buying inventory. The same thing is my receivables. My receivables, this also increase. Is the same analogy from inventory because they are both assets. If asset increase, it's an outflow. So if your receivables increase, it's like you are selling more inventory. You are giving people more goods. Okay. So it's also is an outflow as well. So you treat it as in jacket. Then the final one is the payables, which is also increase in payables. So that is going to be increase in payable. Is it going to be an outflow or inflow?
Inflow.
Inflow. Yes, it's going to be inflow because that's similar to you are borrowing more money. It's similar to you are borrowing more money. Okay, so we treat that, we analyze that as if it's an
So I
inflow.
don't understand this aspect.
Okay, is it why it is outflow or what
Yes,
exactly
yes,
is on?
exactly. I thought inventory is like a stock, so it's like inflow. I don't know.
Yes, the inventory is coming in, but you need to look at it from the money aspect. For inventory to come in, you will have paid money now.
Okay, yes, okay. Okay, that's good. Okay, thank you. I understand it now.
Yeah.
So how about the receivables? Sorry.
Yeah, for
Because
receivables to increase, you must have given them more goods. It's as good as you are giving them money. That's how to interpret it. You will have given them more goods. So the reality is that any increase in assets, the way you analyze this working capital so that you make mistake, any increase in assets is as if you are buying more assets. So look at it from the cash perspective. That's an outflow. Any increase in assets. So receivables, inventory, or any asset that they give to you. For liabilities, if your liability should increase, that's as good as you are collecting money. So you treat it as an inflow. You treat that as an inflow because it's a liability. Can see your hand up. You can ask your question.
Okay, sir. We are still under operating activities, right?
Correct.
Oh, is it important we put operating activities as in this thing?
Correct. Thank you very much. There's another word that is bigger than important. That shows how necessary it is for us to put it. Thanks. Okay. Can you please cumulate it for me from here? This, add this, remove this, remove this, add this. Do we have?
280. Somebody should confirm. 23280.
Wait. Okay. So we have this is as good as you have adjusted this profits. This is the cash of this. This is the cash gone that you actually received. But we cannot conclude. This is your cash flow from operations. So but we cannot, because you are still going to pay tax. You are going to pay tax. Pay tax from your cash from operations. I think our cash is note 12 or thereabout. Note 13, yeah. We pay the tax of 10P20. Note 13. Pay the tax of 10,320. And tax is an outflow. So what's the difference now?
$12,960.
12,960. 12,960.
Okay, so there's something I don't want to meet. Okay, because it's an expense. It's an expense. They told us that a cash payment of 58 million in respect of insurance premium, they paid it, but they omitted it from the books. So I will need to remove it in operating activities, just so I don't forget. Let me quickly remove that. So where is it? Insurance premium paid. 58. So how much is this? Just take away 58 from this 12,960. Okay, that should be this, I guess.
12,902.
Yeah. We are done with that. The next item is usually my investing activities. And I've already done all my workings. It's just the movements. The first one, I have my addition to PP. I have my addition to PP. Is this an inflow or an outflow?
It's an outflow.
Outflow.
Is an outflow.
Outflow.
Okay, that's correct. That's correct. After that, I have sales proceeds. I sold some delivery van. Okay. Of PP. This, of course, will therefore be an inflow. Then my next one was intangible assets, acquisition of intangible assets, which should be an outflow. Acquisition of intangible assets will be an outflow. The next one, trade investments, acquisition of trade investments. It should be an outflow. After trade investments, there was a sales proceeds. They sold trade investments. They sold trade investments. Sales proceeds, trade investments. That will be an inflow. And that was all the assets that we have. That was all the assets that we have. We dealt with this under statement of changes in working capital. So that's all. So the only one I will not want to forget is that interest received. That I said I will reclassify from operating to financing. This one 670. is an inflow. I treat it in one. I'll treat it in investing. So what's my net cash flows from investing activities? Can you please cumulate all this together?
$10,990.
Is it inflow or outflow?
Outflow 10,990.
10,990.
So that's my net cash outflows from investing activities 10,990. Then my financing activities. My financing activities, what do we have there? I have my loan, additional loan, everything. I will just be taking it from my working. I've read my workings is everything. So additional loan, inflow or outflow?
Inflow.
Yeah, that's correct. Inflow. Aside the loan, my share capital and my share premium, the issue of shares, share capital 3,750, share premium 1,2, share capital 3,750, share premium 1,2. They are all in flow because when you issue shares, you collect money, and that's all item in financing activities. And don't forget finance costs, which we classified from operating, this 5,220. So I classify from operating to financing. It's going to be an outflow. It's going to be an outflow here. So what's the value?
We have dividend paid.
Thank you very much. We worked that as well. Dividend paid. How much was it?
5,400.
You got 5,400. So that's why you have to go through your working sequentially so that you won't omit anything. I think we worked it out here in note 11. And they also give us in the question as well. Okay. So what do we have?
610.
Is it inflow or outflow?
Inflow.
$610. Okay. So having done that, there's something we call reconciliation of cash and cash equivalents. So you do your opening cash and cash equivalents, which is in this case is going to be they give me short-term investments. I was given my cash in hand. I was also given bank overdrafts. My short-term investments for my question opening was 2,760 opening. 2790 and 360. 2790. 2790 and 360. What's my bank overdraft? What's my bank overdraft? My bank overdraft is 7530. Abi, can you say it? 7530. So how much is that? 7530 for bank overdraft. What is it? 7530. So this will be an outflow. Abi? This will be an outflow. So can you give me the net of these three?
Outflow 4380 negative.
4380.
4380. Okay. That's the opening cash and cash equivalent. Then we'll get my cash and cash equivalent during the year. Which is the balance of my operating activities, my investing activities, and my financing activities. So how much is my operating activities? 12,900. What's my investing activities? It's 10,990. And what's this one? This is 610. What's the balance here?
25222.
25?
2552.
Is it in jackets?
22.
No.
No. So what's
No.
my closing cash and cash equivalents? So how much is
Minus
this?
1858.
Minus what?
1858.
1858, which should of course be equal to the short-term investment, the cash in hand, and the bank overdrafts. So, and of course, there was an insurance premium that was not recognized. So, what was the short-term investment closing? The short-term investment was is 3810, cash in hand is 930. 3810 and 930. 3810 and 930. What's my bank overdraft? Is 6540. 6540. 6540. So this premium, since they paid it, it will have actually been reflected here.
Yeah. Yes. 158.
Yeah, that's 58 balance. So can you cumulate these three? What do we have?
1,008. So there's
We have
this
what?
58 difference. There's 58 difference.
You got 1,800.
Yes.
Okay, yeah. So if you add the
Premium
no wait, if you put this 58 here, what do we have?
balances.
No,
1858.
if you put it here, so that means you did this plus this minus this one. Is that what you did?
So it's in negative.
Yes, we've got 1858 negative.
You got 1,858 negative, which is this. Okay.
Yes.
Okay, so that's where we want to be. What's time? It's almost 7 now. Wow. Okay, yeah, Victoria, you can ask a question. Victoria.
Sorry, sir, I was speaking and I was muted. I didn't know. Good evening, sir.
Oh,
So
okay.
it's about the bank overdraft. I don't know. I'm confused as to why it's an outflow.
Liability now. Liability is an outflow. Is money that you owe the bank. So if cash, the money we have is an asset. So all you're doing is reconciliation. At this level, all we are doing is just reconciliation of cash and cash equivalents. But it needs to jive with all these things we are doing. So we did the opening cash and cash equivalents. We put all our cash and cash equivalents together. So at the beginning, it was this. During the year, is this. When you cumulated these three, if you cumulate, the closing you get should be exactly this. It should be exactly this. So the bank overdraft it will net off against the money that you have in your bank. It reduces it like that. So that's why we're treating that as an outflow. Is net of the cash. Any
Hello,
other
sir.
question?
Hello, sir. Sorry, sir. Please, how
Okay.
do we identify the inflow and the outflow so that it will not be confusing? Because I think when we have negative figure, that's when it is called outflow. Or is it when we have a positive figure that is what is called inflow? So I'm a little bit confused in that aspect.
Oh, okay. So all negative, we treat it as outflow. Positive is what I mean by inflow. Okay. Any other question? Yeah, Owelua, you can ask a question.
Sorry, sir. I have a question about the format you use. Is there because the format normally that, sorry, I know is that, are we supposed to state why it is 1858, or we can just write the cash brought down without putting all those short investments? I don't know if you get what I'm saying.
I don't teach. I'm teaching you to know. I'm not doing shortcuts. And that's why I didn't even
Okay.
teach you format. Everything here has an explanation. So know it first, then you can start talking about
Okay.
an easy way out. If you cram, it's a problem for us here. You have to know this. You still have plenty of time. Go and learn this. This is a reconciliation of cash and cash equivalent. If you don't do all of this, you won't get all your marks at this level. Yeah. Yeah, Kende, if you're lower, please ask a question.
Okay, sir. Please, for the insurance premium, right? We already adjusted for it in
My network.
No, I think it's our network
Can't hear
because
you. I can't we can't hear
So
you.
what are we adding it again to the reconciliation?
So I guess what you're asking is that she said we already removed it from here. So why are you removing it again from the reconciliation? It was a complete omission. It was a complete omission from the books. They did not include it at all. So it's now we are including it. So that's why I removed it from expense and from and that's why I removed it from the two. I removed it from the expense, which is operating activities, and from the cash balance because it was completely omitted. They didn't even include it at all. Any other question? Now, you see, we would stop here for today. I had to take my time to explain all of this just so that you understand it. The only responsibility you have between now and our next class is to go and resolve this thing yourself. I'll be solving 3 more questions. Yeah, I'll be solving 3 more questions. So that means basically our next class would be solving additional 2 questions. And it's going to be faster. I'll be faster than this in the next class. I'll be solving 2 more questions. And hopefully, we are also going to be able to do our sustainability reporting in the next class as well. So that's it from me to you today. Any further question? Yeah,
Yeah,
Ruth.
thank you. Yeah, you drop this for us, isn't it? Thank you.
Yeah, sure.
Okay,
Thank you, sir.
please drop it on the group chat. Thank you so much, sir.
You're welcome. You're welcome.
I appreciate.
Thank you,
You're
sir.
welcome.
Thank
You're
you, sir.
welcome.
You did.
Thank you, sir.
My question, please.
Okay, Ruth, go ahead, please.
Okay, thank you. My question is regarding the last class on ratio. When you when you talk about return on equity, are we to divide the oh, what am I saying? Oh, I just forgot my question now. A return on equity,
Yeah.
are we to divide the profit after tax with equity or the profit before tax?
This PBIT, profit before interest. Oh, return on equity. That's profit after tax.
Yes. Profit after tax. Okay, if you have to go back to your notes to make a correction, please, because you wrote profit before tax slash profit for the year. That's what you wrote in your notes.
Okay, which means either of the two then. But we usually use profits for the year. Either of the two is fine.
Okay, we can use profit before tax. We can use profit after tax.
Yes.
Okay.
Mm-hmm.
Hope it won't give us a different answer or wrong answer.
No, it's not a wrong answer, but you won't have a uniform answer. And that's not how they really, it's okay. Since I've written that for you, that means it's correct.
Okay, thank you.
All right, guys. Bye.
Hello, sir.
Yes.
Yeah, what we talked about, you said you're going to address it at the end of the revenue in the last question. So,
Okay. I will check it and get back to you guys on the group.
all right, thank you.
Yeah, bye.